The volatility that was present in the markets during the past week provided a roller coaster ride for gold's price, yet the precious metals price appears to have roughly stabilized. Today we are to discuss the fundamental challenges laid ahead for the precious metal, while we'll be concluding this report with a technical analysis of gold's daily chart. The release of the US CPI rates later on today could heavily influence the precious metals direction, as the financial release may be considered as the next big test for gold's price. Economists are expected the US CPI report to showcase easing inflationary pressures in the US economy, with the headline CPI rate on a year-on-year level is expected to come in at 2.9%, implying that inflation is decreasing at a decreasing rate. Should the CPI print come in as expected, the release could potentially weigh on the greenback, as it could validate the current market's expectations of 5 rate cuts this year, which in turn could support gold's price. On the other hand, should the CPI rates come in higher than expected, essentially implying that deflationary pressures persist in the US economy, it could potentially provide support for the dollar, which in turn could weigh on the precious metal given their inverse relationship with one another. Fed officials over the past week appear to have backed Fed Chair Powell's comments, who implied that monetary policy may have to remain restrictive until more data is available to the Fed. In particular, we highlight the comments made by Minneapolis Fed President Kashkari, who was last Thursday stated, "At the moment, 2 to 3 rate cuts this year seems appropriate," which could imply that the current Fed funds future expectations of 5 rate cuts by the Fed this year may be over-optimistic. Furthermore, on Monday, Fed Governor Bowman stated that it's too soon to predict when the Fed should start cutting rates or how far they will go, seemingly agreeing with Fed Chairman Powell's and Minneapolis Fed President Kashkari. Overall, the hawkish rhetoric emerging from the Fed may have provided support for the greenback last week and thus may have weighed on the precious metal. We anticipate that the intensity of the hawkish rhetoric by Fed officials this week could vary depending on the release of the US CPI rates. Should the CPI rates showcase easing inflationary pressures, we may see Fed officials adopting a less hawkish tone, which could weigh on the greenback, thus providing support for gold's price. Whereas should the CPI rates come in higher than expected, it could intensify the hawkish rhetoric emerging from Fed officials, thus potentially aiding the dollar while weighing on the precious metal. We expect financial releases to guide gold's price in the next few days, given that some US high-impact financial releases are expected to be released, with special focus being placed on the US retail sales rate for January. Yet we would note the release of the US Philly Fed Business Index figure for February on Thursday and the University of Michigan preliminary consumer confidence figure for February on Friday. On a technical level, we note that gold's price appears to have recovered slightly since the beginning of the week. We maintain sideways bias for the precious metal, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 50, implying a neutral market sentiment, yet we would quickly switch our sideways bias for a bearish outlook should the precious metal break the 2005 support level. Nevertheless, for our sideways bias to continue, we would like to see the precious metal remain confined between the 2005 support level and the 2035 resistance line. On the other hand, for a bearish outlook, we would like to see a break below the 2005 support level, with the next possible target for the bears being the 1975 support base. Lastly, for a bullish outlook, we would like to see a clear break above the 2035 resistance line, with the next possible target for the bulls being the 2064 resistance level. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you a solid trading.